welcome to The Business. I'm Elise Morgan. Coming up on the program, day one of the deep freeze for Victoria. Businesses beg for answers and supermarkets scramble to keep the shelves stocked. And keeping it clean. The taxpayer-funded $10 billion Clean Energy Fund ready to boost the economic recovery. As the clock ticked over to midnight last night, thousands of Victorian businesses and workers were still in limbo over the lockdown. As we covered yesterday, many didn't know how the rules applied to them. The Victorian government held late-night crisis talks with business groups pleading for exemptions and seeking clarifications. Today, many shut their doors. Others tried to accommodate stringent requirements to continue to operate. Daniel Ziffer from Melbourne.
Melbourne's hard shutdown has begun. The questions remain.
Just trying to keep up with the regulations is quite tricky.
Victoria's economy has been placed in an induced coma. Like most emergencies, there's anger, pain and confusion.
Just keeping up to speed with everything, with the speed of the changes that are occurring and everything that's going on. I know that my bosses have spent a lot of time on the phone trying to work out different things, trying to talk to different government departments.
The aim is to stop the spread of coronavirus and then wake businesses up in 6 weeks' time.
There's costs all over the place, whether it be in dollar terms or in funerals. I'm not going to be trying to put a price tag on this. This is what we have to do. We have no choice.
No one disputes the price is high, likely between $9 and $12 billion.
Treasury has assessed the impact of these new restrictions and notes that there is a high degree of uncertainty in relation to any of these estimates.
In Victoria, at least 250,000 employees are expected to be stood down this week. These job losses will be concentrated in the retail, wholesale, construction and manufacturing sectors. Together, these sectors accounted for around 59% of Victoria's gross state product last year.
Nothing has gone smoothly. Victorians woke up not knowing if they could go to work because the minister in charge of the regulations didn't send out a list of permitted workplaces until 1 a.m, an hour after the orders came into effect.
It was a very long night, a very late night trying to settle these matters, but I'm very grateful to them. No one enjoys having to wind back activity in any part of the economy, and no one certainly enjoys potentially putting timelines off.
Business groups are pleading for exemptions. They say reducing the workforce of construction sites will make some projects unviable, and doing the same at distribution centres will lead to supply shortages.
There are serious problems with current restrictions in Victoria. We must do everything we can to avoid far-reaching and serious unintended consequences.
But a supply chain expert said supermarkets are prepared. The only potential cause of empty shelves is panic buying.
If it's essential food supplies, for example, or supplies in the supermarkets, I think that people can be pretty much assured that they're going to be able to get that.
Most businesses I've spoken to are supportive of the shutdown and want to see an end to community transmission of the virus. They say if customers don't feel confident about their health and secure in their employment, you could open your shop or industry 24 hours a day and it wouldn't make a difference because people wouldn't spend money.
Day one, restarting the clock on a long year.
Dan Ziffer there. Well, Premier Dan Andrews reassured Victorians there will be food on the shelves, not necessarily their preferred cut of meat. Think more mince and less beef cheeks. But there are growing concerns there will be shortages after the government confirmed late today that food manufacturers' distribution centres, as well as supermarket distribution centres, will have to cut their workforces by a third. Dr Jeffrey Annison from the Australian Food and Grocery Council joined me.
It means that they're in scope for staff reductions, and the staff reduction is 33%, so no more than 67% of the peak workforce can work in those facilities at any particular time. What we're unsure of is how this may affect the movement of product down the supply chain. In other words, how the productivity of the supply chain will be affected but we do have some concerns about that.
Surely this will affect the amount of food that can be produced and then moved down into supermarkets, wouldn't it?
Well, clearly the priority of both the food manufacturers and the supermarkets is to get as much product down the supply chain as the consumers need. There may be some workarounds that are possible by some businesses. For example, they might be able to put extra shifts on at night so that any particular time we're still below that threshold of 67%. However, that flexibility may not be available to all businesses.
What other questions do your members still have about these shutdowns and partial shutdowns?
Well, what we'd really like to know is whether the companies, if they can demonstrate that they have very effective COVID-safe plans, and remember now that the companies have been working on their COVID safety plans for well, a number of months really, whether the staff management protocols that are within those COVID-safe plans can serve to allay the government's fears about person-to-person transmission on the work site, and then allow perhaps higher levels of workers to remain working not only in the production of food, but also in its distribution through warehousing and supply chains down to the supermarkets.
If your members do have to reduce their workforces and there's no special arrangements put in place for you, does this put food supplies in jeopardy?
Really, I think it's a little bit early for me to say whether how the impact might be either business to business, food category to food category. But as I said, we are concerned, but we're certainly not alarmed at the moment.
Jeffrey Anderson, thank you so much for your time.
Okay, thank you. It's been a pleasure.
To the markets, which finished higher after an afternoon rebound. The ASX 200 gained 0.7%, helped by a surge in BHP shares, which closed 4.9% higher. The Aussie dollar buying around 71.8 US. For more, I spoke with Junbei Liu from Tribeca Investment Partners. Junbei, strong day for the miners, in particular BHP. What was behind it?
It's been incredible. Look, it's of course, it's the further stimulus out of the US is getting market excited. Maybe the global growth will come back after all. So miners, of course, is the place and the way to play it.
And we're starting to see profit results trickle through. ResMed came through today. I mean, it makes ventilators, so there was a lot of positivity around it, but the shares got absolutely thumped today. What's going on?
Absolutely. This is very interesting. Not very frequently you see a company beat the expectations by 15%, and yet share price is down over 8%. It's mainly because they talked to that ventilator sale is not going to be as strong as previously hoped, as well as over the next 12 months, the sleep businesses, which is a big part of the business, may well be very slow to recovery. So on these bases, the outlook look a little bit challenged for expensive stock like ResMed.
So they've pushed out as many ventilators as the market will take, I guess.
That's right, that's it.
And over reporting season, you're a star stock picker. What do you think is going to be two stocks that will surprise to the upside?
Look, I think there's a couple of very good ones. The first one will be Domain. Now, Domain share price actually lagged a little bit, but because of the second lockdown fear and the like. But the property listing is actually looking really, really strong, particularly for the Sydney market. And Domain is very leveraged to that listing recovery. And over the next 12 months, this company will double its earnings with the lockdown in place, even for the current period. So that is looking very well positioned. Also, we think Harvey Norman, interestingly, will have a pretty good result. We've heard from Nick Scully today on how strong the demand is for the household durable goods, and Harvey Norman has already said the top line will be more than 20% higher than the expectations, and the bottom line, we think, will be much bigger than that.
Everyone's been out buying stuff for their houses. They're locked home.
That's right.
Junbei, thanks so much.
Thank you very much.
As the COVID downturn drags on, some are considering the way out the other side. The Clean Energy Finance Corporation is hoping to help fund Australia's manufacturing sector become greener and spur activity, and to replicate the success it's had with large-scale wind and solar in the emerging green hydrogen sector. The taxpayer-funded CEFC has released its annual results showing it deployed more than $1 billion on new projects in the year and has another $3 billion to deploy. Ian Limont is the Chief Executive. Ian Limont, what role can the Clean Energy Finance Corporation play in helping Australia through this recession?
The CEFC could play a very significant role in getting and helping the country recover from, COVID, in the sense that we've got a significant amount of capital. We've committed today 6.4 billion of our 10 billion, so many billions still to invest. We've got a broad investment mandate, and we can support clean energy projects around the country, creating jobs and stimulating the economy. So I think there's a lot we can do to stimulate a country in recession.
There's a lot of people hoping that we will see a manufacturing renaissance. The CEFC hasn't been particularly big in that space previously. It is heavy industry. We've seen the ACTU calling for it to be greened up as well, which would be stimulatory. What role does CEFC potentially have in manufacturing?
Well, we're very interested in seeing what we can do with the manufacturing sector. I mean, it's a very significant emitter of carbon, as you identify, and roles that we'd like to play is help that industry produce competitive products, building products, green cement, green steel, green aluminium. To go into projects around the country. So we're engaging very actively with the manufacturing sector to see what we can do, particularly, as I say, around those building products.
Your annual report showed that your rate of investment has slowed over the previous year. Why is that? Well,
I guess there's a number of reasons for that. We've seen a bit of a slowing, of course, in the renewable energy sector with the build out of the RET. The government's renewable energy target. But we don't really kind of sweat that too much. Yes, it's a little down in terms of commitments on the prior year, but it's still been a very good year for the CEFC, despite the challenging conditions.
What's your view on hydrogen? How far off are we from seeing that as a decent source of energy in Australia?
Well, I think it is a long game, there's no question. I mean, we're very excited about hydrogen as an emerging sector here in Australia. The government's directed us to invest some $300 million into hydrogen and projects around the countryside. ARENA, our kind of grant-making cousins, if you like, they are running a program at the moment, and they've got 7 shortlisted participants for their program. We hope to support that with debt, possibly equity. But it's a long game, and it's about hydrogen being cost-effective and competitive to other fuel sources. And the government have announced an aspiration for hydrogen to get down to below $2 a kilogram over the coming decade or so. So it will come down to those sort of really raw economics.
And to make hydrogen with gas is not a renewable energy. You need to be doing it with renewables in order to make it clean. Do you think that that's going to be possible within the next 10 years?
Well, certainly making clean, renewable hydrogen from an electrolysis process that's been driven by renewable energy absolutely is possible, and I think that's some of the projects that we're going to see in the near term. I think the challenge is getting that to scale, and we're hearing about some of those very ambitious projects about building out very large renewable projects up potentially in Northern Australia, creating clean or green hydrogen and potentially transforming that into a transportable form and sending it off to Asian markets like Korea and Japan. And I think that's one of the big aspirations that we as a country have, and I think it's very exciting.
What about carbon capture and storage?
Carbon capture and storage is currently precluded under our Act, so we couldn't invest in it even if we saw appealing projects. So it's entirely up to the government whether or not they might change that in the future.
That was raised 2 years ago as a potential change to the Act. It didn't happen. Do you think that will happen under Minister Taylor?
Elise, it's entirely up to Minister Taylor and the government. So we'll keep investing in accordance with the Act, and if that was to change, then we would look to seeing how we might be able to invest in carbon capture and storage if that was to happen.
Ian Leamore, thank you so much for your time today.
Thank you, Elise.
And that's all from The Business. For more stories from the ABC's business team, head to our website. I'm Elise Morgan. Good night.